I heard that. I'm like, I had to start it off with this one. This is good. Okay. Everybody, welcome back to the Financial Advocacy Podcast. My name is David Kinder, your host, registered financial consultant, charter life underwriter, with my co-host Mike Moffitt, and we're going to be talking about the interesting world of MLM advice from MLM Insurance Services and MLM Insurance and Financial Services. And you could tell from that introductory music that I heard and I played here for you, you can tell what I think about it, but we're going to try to be as balanced as possible. Granted, you can tell we probably have a negative slant, but we're going to try. Mostly.
By the way, I had nothing to do with the music. I was not warned.
No, you weren't. I wanted to see your look on your face. Was it appropriate?
Sure.
We'll talk about that offline. Okay. Okay. So let's start off with the positive, because there is some positives of these organizations, and there's two main positives. And the first one is that it helps to attract new people into the industry. The biggest thing that they do, and they do it far larger and far bigger, probably more effectively in recruiting new agents and, depending on the company, financial advisors and let's call out the other more classic names, the New York Lifes, Guardian, Mass Mutual, Northwestern Mutual. They don't recruit nearly as large numbers as these other organizations do. Now, granted, I think these traditional career companies, they're looking for the college education. They recruit at college campuses and things like that. Whereas these network marketing organizations, they're recruiting all the time, primarily from the people they're meeting with, which is, it depends on how you think about it. But they are bringing in far more people into the industry than all those other organizations combined. So I have to acknowledge that they're doing that job. And there is a huge need. In fact, if we go to, I wasn't planning on this, if we go to the Bureau of Labor Statistics, the Outlook Occupational Handbook, one of the fastest growing needs of professions is personal financial advisors, which includes insurance agents. And knowing that the need is huge, these organizations, in a way, are stepping up to fill the need. Now, I may not like how they go about doing it, but they're doing it. That's the first big thing that they're doing. The second big thing that they're doing is they're getting policies placed, generally speaking. Now, that's not necessarily too many per rep, but as a whole, when you have a huge organization like some of these groups have, all you need is each one to do one or two a year. And that organization, they're moving a lot of product on behalf of those companies. So we have to acknowledge that they're doing a job, and they're getting insurance placed, and they're promoting the fact that people need to buy life insurance, disability insurance, and annuities, and whatever else that they're doing. So of all those things, those are the two biggest things. Mike, your thoughts? Let's make sure I'm not completely off base here.
Yeah, I mean, I would agree. We'll probably get more into the issues with it later, but there are definite, good things about it, like people getting insurance, the insurance industry having, fresh agents in it, being, I guess recruited, so to speak, and it kind of growing that way. So there are, definite advantages to it, because everybody should have life insurance, right? So at least having some life insurance, or a disability, or a critical illness policy, or a XYZ policy, having something is always better than having nothing. So that is a positive that they're bringing in new agents. They're introducing them to the insurance and financial services industry. More people are getting coverage. There's still a lot of issues that should be worked out with it, I think, of course, which we'll get into. But right, like you said, there's definite positives for it. So it's not all negative. So you can't, nothing is really ever all negative. So let's at least work with the positive part first, and then we can kind of look at some of the things that may not be so beneficial. not only just to the consumer, but also for the agent as well. Yeah, there's definite things that you should be aware of on both fronts, from both a consumer and an agent perspective, when getting involved with these MLM type insurance recruiting companies that pretty much will take anybody that can fiberglass. So
Yeah, and we're here. We're going to talk about it right now. And your dog is definitely voicing opinion here that she's a she's offended. She doesn't like what's going on. Yeah, that, that's, that's what I'm assuming here. Um, there's a number of different companies. Each work slightly differently. And let's just list some of these out real quick. So the biggest one, the most classic one that we often think about is Primerica. Primerica is, and depending on how old you are, they might remember them as the old A.L. Williams organization. This was back formed in the late 70s. You might say, David, how do you know that? I know, I was born then. So it's not like I was around for that nor had any acknowledgement. But Primerica, and I want to differentiate them from all the other ones real quick because they are an actual insurance company. They issue their own policies. And whenever we're talking about companies, I always have to make sure that we're delineating between company as an insurance company, the ability to pay claims, and company culture and business practices and things like that.
right.
So we might be a little more critical. The first thing I'm going to say is Primerica issues policies. They do pay claims. They're a well-rated company. That's the first part. I'm trying to cover myself on that because one of the things about the insurance industry and insurance agents is that we're not supposed to be uh, tearing down actual companies. We're supposed to be very positive on that. And anytime that you are negative, it's a bad thing. It's actually in the insurance code. You're not supposed to be doing that, especially to incite someone to replace a policy. So there's something to that, although Primerica has a checkered past on that one. Um,
I was
because
gonna throw in, with the I was gonna throw in with the clause, unless it's a Primerica policy, but well, never mind.
well, here's the thing about the history of Primerica, and actually the history of Primerica actually from what I've heard, so therefore I cannot cite a source on this, but because of a lot of the abuses that were once taught in the past, Primerica has a mantra. Their mantra is buy term and invest the difference. Now, a lot of people say, well, who invests the difference? Well, really, investing the difference is all about behavioral finance. If you're going to contribute to a cash value policy, you could do the exact same behavior to an investment policy or investment plan of any kind. The money coming out of your account is the same and it acts the exact same way. So whenever I hear, well, who invests the difference? I'm like, get out of here, find something else. Granted, not everybody stays consistent in saving the difference or investing the difference, but that's the flexibility there. How many people end up borrowing against their life insurance or halt payments for a while because they can't afford the premiums? Everything happens to everybody. So whenever someone says, well, they don't invest the difference, well, not everybody continues their contributions to their policies either. But the big thing about Primerica is that at one time they were, from what I understand, they were dumpster diving behind insurance company offices. This is before shredders were a big thing, and identity theft and things. In a way, they would go dumpster diving. This is what I've heard behind these agencies, trying to find policy information and to save these clients from these big bad whole life insurance companies and replace them. And part that kind of behavior again that I've heard of secondhand, that behavior led to the fact that most every state now has had pre-licensing education that's required before you even take the license exam, so you understand how life insurance is supposedly works, and that you can be tested on it, and that everybody knows what the insurance code is. So these days, Primerica isn't, as far as I can tell, they're not on that exact crusade. They will replace an inefficient cash value policy. And every time I hear about a Primerica agent replacing an inefficient policy, I'll ask them questions about that policy. And based on the numbers they're giving me, that policy deserved to be replaced. So they've evolved. I'm going to give them that credit. But they're still on the buy term, invest the difference, one size fits all type of advice. And they usually don't deviate from that. They don't add that extra higher level of thinking into their advice. And there's a business reason behind that. Network marketing, if anybody's ever been to one of those meetings of any kind, whether it was an Amway, Shackley, or some of the telecom companies of, I don't know, 30 years ago, I was in one. Back then, I just lost my train of thought. I hate it when that happens. Oh, damn it. All right, save me, Mike. All right. It'll come right back to
well,
me.
I just want to, say a little bit about that. So when you were talking about, replacing, the policy, I think before you do that, the important thing would be to, how do I want to put this? Make sure that the policy stays in force while they're going through underwriting. And then once, they pass that underwriting, then look into replacing that, policy with a new policy, because you don't want them to, be replacing something that they could have. And then when they find out that they're ineligible for insurance because of some kind of sickness or something like that, to replace it. So how I would do it is, if you're going to replace a policy like that, write the new policy, but don't cancel the old policy until the new one is enforced or you've been approved, because you don't want to run into a situation where, even if it's not the most efficient whole life or even more expensive term life or IUL or XYZ QRV whatever thing, insurance product, it doesn't matter if you get rid of it if they can't get another policy in place. So I think the big thing is, and this goes for anybody, not just for Primerica, the big thing before you replace anybody's policy is to make sure, before you tell them to cancel it, to make sure that they are eligible for another policy, and not just tell them to cancel it and get rid of it. Because if you submit an app and they get a decline, more than likely the other insurance company is not going to let them get that policy back since they already canceled it. So I think that that's a very important thing to look at, is not to just go around canceling other people's insurance willy-nilly, but to make sure that they get something else in place around the same price, or even if it's a little better price, that's fine, before you go ahead and just cancel what they already have, because you don't want it to be where you have a physical, or the MIB comes back, or something or other, or a medication that maybe they forgot about, and then it's a decline, and then you're in a way worse spot. So but yeah, that's the thing, just be sure that you're able to get them something similar or better before having them cancel the product they already have.
Yeah, absolutely. And no, so I'm going to circle back, because I remember the point I was making, because I knew if I would just pause for like 5 seconds, it would come right to me. And here's the thing that happens in these network marketing organizations, is that there's this myth, and I call it a myth. It's the duplication myth. And so basically, in order to make network marketing companies, all of them, doesn't matter which one, in order to make them as viable as possible, you got to make their training as simple as possible, and you got to make it as easy as possible to do business. And that means keeping your training as simple as possible and telling people, here's what you need to do a good job. And so they end up turning usually a lot of mantras into planning advice. Now, in my opinion, that's lazy, but it's efficient for the company to make sure that they're recruiting a whole bunch of people at once, and they're all going out and they all have the same message. And so they're heavy on recruitment. In fact, for the agent or advisor to get a bump in their compensation, they have to recruit in almost all cases.
Right. Mm-hmm.
There's somewhere you don't have to, but from what I've heard, in order to get to the highest levels of compensation, you still have to have built a team of some kind. And what's interesting is that they promote another myth, which is that this business is easy. And I don't like promoting that myth at all whatsoever. this business is hard, not because of inefficient training or because of the licensing or all this stuff. It's because to really serve a client, you need a lot of training and knowledge and ability to communicate. And it's hard. It's harder to do this business well and to do it right. So when I look at the advice given by these MLM organizations compared to others, the MLM, let's look at how they recruit, and they're recruiting with the opportunity, right? You go to an opportunity meeting, whatever they call it.
Yeah, that's exactly what
And
we do most of the time.
yeah, it's an opportunity meeting. And you can always tell because it's held like at 7 p.m. somewhere. And you're going to go in, and they might even say, this is a group interview. Well, I'm going to really try hard to make sure I don't swear, because some of this stuff really kind of gets to me. But they call it a group interview, and yeah, you're going to come at 7 o'clock at night, and they want to make sure you meet everybody, whatever. Okay, it's the same old tired tirade. Um, and the thing is that you're going to be taught, here's how life insurance works. Here's the rule of 72. Here's all this stuff, and then here's how much you can earn if you help two families a week with a plan for $200 a month. I mean, this is a different organization that went through this. This was pretty much an IUL type of a thing, and this was 14 years ago for me. They didn't know that I knew how to use one of these, so of course I brought it out, and I'm doing the math, as they're giving everything. But anyway, but the idea was you get a whole lot of people all doing a little bit, and because you brought all those people in, you get to make a massive income as the override. There's not a lot of discussion about the liability of the agent. And I think we eventually, depending on how abuses are determined and such, and determine if it is abusive, I think E&O is going to change. Now, for our audience, E&O stands for errors and omissions insurance. This is when an agent makes an inadvertent error. This is not intentional. This is not fraud. This is not misrepresentation. This is, oh my gosh, I made an error, but it does create a material consequence, and maybe we can't do anything about it. And you decide we're going to sue for that difference back. And so errors and omissions, in a way, it's kind of like malpractice insurance. And when I look at some of these E&O coverage, and I like them, usually for life insurance and things, the deductible is $0. So the agent and basically the company, they don't have to pay anything out of pocket for that representation. Yet for securities, if I'm selling a variable annuity, if I was selling mutual funds or whatever else, there is a much higher deductible on that. And I think it's like 2,500 or 5,000, depending on the policy. And so when we look at what is the risk to the company, what's the risk to the agent for even bad advice, and there doesn't seem to be a whole lot. Unless, now, by the way, does not cover the accusation of fraud. So, you really have to screw up bad to be accused of fraud, and some of the things that we see is, if you're doing a Ponzi scheme, I mean, all those things, if you're doing a criminal act, it's not going to cover you. This is for the normal course of business that yet, because of an oversight, it has a material consequence to the client. So normally we don't talk a whole lot about E&O coverage and such because, quite frankly, it's really not the client's business, but it's interesting how it factors into how all these organizations can work. And I think, it's my opinion, they don't talk about the consequences of not doing the job right well enough in these organizations. And I think they put compensation and their business model ahead of an advice model, which is what I think the rest of our industry does. If we look at the same names I mentioned earlier, which is New York Life, Mass Mutual, Guardian, Northwestern, and the other more traditional agencies, these are more of an advice-focused model rather than a compensation model. Now, granted, none of us are nonprofit organizations. We're all in this business to make some money, but we're not being fed. We're not told, go to a quarterly symposium meeting. Okay, I didn't mean to use that term. Going to a quarterly event, a rah-rah event.
There you go. That's what I was going to say. A rah-rah meeting.
The rah-rah meeting. There it is. Yeah. And let's get you all piped up. Hey, bring some people over to check out the business opportunity so you can, it's a different mentality I believe, altogether. Um, and it's part of the thread of a network marketing organization. They all work like this. They all thrive on these rah-rah events. They've got to recruit, bring in fresh new blood. And one additional reason for that, it's not just the recruiting part, but and this is a side effect of a law that went into effect in 2001, which was the do not call laws.
Mm-hmm.
When do not call went into place, now, granted, no one likes getting calls, especially, you like to change a long distance. Would you like to apply for a credit card on all that stuff? And that was the stuff that we didn't like. Granted, thinking about how many calls we get today that are true scam calls, the do not call law has almost nothing to do with them, because all these things, all those scam calls are coming from overseas. They're all, Pakistan and India and whatever else. They're all trying to scam, the IRS scam, the Social Security scam, the student loan scam, we're trying to reach you about your car's extended warranty scam. All that's all coming overseas. So the only people that got hurt are the legitimate businesses that are here in the United States that would love to expand, but it's harder to do. And the penalties for violating do not call are astronomical now. Was it like $50,000 per call?
Yeah,
It's absolutely
it's
insane.
wild.
And so one of the things that's neat about what these companies are doing, I say it's neat because it's neat for them, for the company, is that they bring someone on board and they do what they call a Project 200. Now, in the insurance industry, we all know what a Project 200 is, and I'm sure they do a lot of the same. Who do you know? Go through your Facebook friends list, reach out to them, and see if you can do a financial needs analysis with whoever you know. Because when you know someone, more than likely, they're not going to file a complaint that you reached out to them, especially on social media. There is no do not call on social media. And that's how these appointments are set. That's how they reach out. Now, granted, I think there's a whole better way to do Project 200, but I'm not going to talk about that here. That's a practice management thing, not a consumer thing.
Right.
But I have had people that I know that were approached by them, and then they would send me the screenshots of how they were approached. I'm like, oh no, and apparently they were approached badly. So they make the whole industry look bad in the way that they're approaching the people that they already know. And then what happens is that they don't stay in the business long enough. There's so many cards that are stacked against them,
Right.
unfortunately.
And that, I think, is the biggest problem from the consumer's perspective, is that agents don't stay in the business long enough well, we can get into probably 1,000 different reasons, but from a consumer, perspective, that's not a good thing if you have an agent. And and I struggle with this because I don't want to tell you, you shouldn't buy from an agent that's only been in the business 1 or 2 months, and that you need to have 10 years of
So we've all
experience.
been there.
Right?
Every
Yeah, that's
agent
the
has
thing.
been there at some point.
And that's the problem, is that you can't say, well, don't buy from them just because they're only been licensed for a month or two, or they don't have a client list, because you have to get that book of business and establish yourself somehow. So that's not necessarily the criteria. But it is a problem that a lot of agents tend to leave within the first year or two, simply because of the inability to be able to generate enough business to stay in the industry. So that is a problem in our industry, is that we do have and do find a lot of abandoned, I guess you could say, policies that the agent just didn't stay in the business or whatever, and that is unfortunate, and I think it's a kind of a plague on our industry, and so and that's where the tough part is, because you don't want to necessarily not buy from somebody that's new just because they're new, and only give all your business to people that have been in it for 5 or 10 years. But at the same time, yeah, I mean, it's an interesting situation because you got to always start somewhere, but at the same time, we want to make sure that the person is going to be able to stay in the industry, and survive for a while and be able to service their clients and not just be there today and gone tomorrow. And we this is more on the consumer advice side, but I think that there's some things that we could go over with an agent, to make sure that they're going to be successful, as opposed to fail, as far as being able to stay in the business long term. So it definitely is an issue, and we need to be better about that, and make sure that agents are able to stay around for longer and service their clients and the policies that are out there. But yeah, good. Go ahead.
So yeah, there's one major factor of an agent failure, which is they're not seeing enough people on a favorable basis. It's the number one factor. Um, Prospecting has always been the issue in our industry since the Million Dollar Roundtable was first founded back in 1927. They did a survey, what's your number one issue? And it's always been prospecting. And prospecting, here's the thing about prospecting, though, is that it's harder these days for good agents to get their message out. And why do you think we're doing this podcast? Let's bring out our interest. This is our business. We want you to contact us because, quite frankly, we're biased to the fact that we think we can do the job better.
Right.
There.
Well,
I
that's
said
fair.
it, right?
Yeah.
That's fair. This is our platform. We can say that, but we're also trying to advocate for the consumer, no matter where you're at, no matter who you're working with. And so, and every organization has what I consider to be exceptional people that are working within it. Now, in some organizations, they're fewer and far between. Within the industry, Primerica has a reputation of kind of being conditioned to be professional trolls. They seem anything that's in the industry, they say everybody else sucks but us. And unfortunately, what that also says, and which is unfortunate for the network marketing industry, because what Primerica also ends up inadvertently saying is that you can't trust the financial services industry, but you can't trust us. Well, why should I trust you too? Right. That's the problem I have. And there's a book. It's one of my favorite books of all time. It's called The Greatest Networker in the World by John Milton Fogg. And it's just a wonderful book. And one of the chapters, actually, there's two great chapters, and I'll get to the other one in a minute. But one of the chapters is that you have to be a champion for your industry, not just your company. And because if you're bad mouthing the other companies, then why should someone believe you about your company? So, and that in that perspective, now there's the other chapter which I really like is you don't know what you don't know. And the way it's taught in there is that the greatest networker is coaching this new guy who's about ready to fail out of the business, hands him a book, said, I want you to read that before our meeting tomorrow morning. You know, the whole book, yeah, it's a quick read. And he flips through it, and the whole book is empty. So, so it was a very quick read. So, but it was called "You Don't Know What You Don't Know." And that's something else that ends up happening for these reps, unfortunately, is that because they're focused more on a compensation model of delivering product or a business distribution model, they're not necessarily focused on how to elevate the advice that they give to help people to really make really informed decisions. And so I'm gonna get off my Primerica soapbox. We're gonna get onto a different actually, any of these 3-letter acronyms could probably fit this. I've heard from other people who've been with these companies or no longer with them, that they would be taught, let's say, for example, and we've talked about permanent policies. Now, the thing about permanent policies, and it's a little bit contradictory, but in order to make a permanent policy really work, you have to put more money in it to really make it work for a given amount of death benefit. You got to over contribute to it. And this 3-letter acronym would basically say, can you get started with the plan for $100 a month? And the person, yeah, we can do it. Do you think you could increase it to $250 in a couple of years? And you're thinking down the line, 2 years, well, I should be making more. I'll get out of school or whatever the situation is. Yeah, I could increase it to $250. Okay, let's write it for $100 a month. They write it on what is called target premium or less, so that they can maximize their commissions. They got a policy in place. The problem with that is that are they going to be around in 2 years to go back to the client and get that additional contribution happening to keep that policy in force? And many times that doesn't happen. And so you're kind of lucky if that company has orphan policies, because those policies just don't have an agent, but at least the policy's in force. It's even worse when, it says we are in the life savings, the net worth business in many different ways. And we're dealing with major consequences. I mean, of all the companies I'm looking at, Primerica may have the expensive term. They might have the term that doesn't have a whole lot of additional riders that a lot of other more competitive companies may have, but at least they limit it to term. Term is term. And as long as you pay your premium during the level premium period, that policy is going to stay in force. You're not going to lose a whole lot of money if that policy lapses. If it lapses, it was a term policy. You didn't lose your life savings. You didn't lose the massive contribution. Yet with the other permanent policies, that's a possibility. This is why we have licenses, not because we're so knowledgeable. Oh, this is a big thing. And it's one of the things I hammer on people all the time. Licenses are not a test of knowledge. Licenses is a test that you could be held accountable for your actions and recommendations. And Mike, you can vouch for, you taught pre-licensing courses.
Right.
So I mean, and what's interesting is that when you have a license, it assumes, rightfully so, that you are knowledgeable in the entire insurance code for your state. That's what it means.
Well, I think it's, well, I don't want to get too negative, but
oh, come on, we're already down this path. Come on.
I mean, I think it's worse than that, because if you really think about it, a monkey could sit at the keyboard and push the mouse or the buttons, and maybe 2 out of 10 times, just by random chance, pass the insurance exam. So
I'm not sure how to take that because my daughter failed it 3 times.
I mean,
I'm just saying.
So, it's not my fault, about that. But she didn't
True.
She didn't come to me, okay? So I did not teach her. So don't think anything, because I was never asked to. So, but anyway, at a certain extent, just because you can pass an exam doesn't necessarily mean you're competent in the business or the industry, right? So anybody can memorize a list of facts, or understand a Medicare plan or a term life insurance product. But the real issue here is that once you get your license, I mean, getting your license is one thing, but there's so much to learn even after that, just about that you don't learn from your insurance exam study materials, just about companies, the products, how to help people with this or that. Basically, when you're passing your insurance exam, you're just memorizing rote knowledge just to have it so that you can pass the test. And that does not make you a good agent. It doesn't matter if one person got 75 and another person got a 98 on the exam. Okay, so they can memorize facts or whatever better. That doesn't necessarily matter. And that's kind of the thing, where people like to get into comparing those types of things. But the thing about it is that you have to know your product. You have to be able to understand the consumer. You have to be able to understand their needs. You have to, there's a lot more nuance to being a good insurance agent than just being able to fog a glass and pass an exam. And unfortunately, a lot of insurance IMOs, certainly IMOs, and some FMOs, and unfortunately, companies like Aflac will take anybody that can pass the insurance exam. And if you look at it, what is it? Cody Askins has the 8% nation or whatever. So
right.
That means basically 92% of agents fail within the first year of holding their insurance license. So and that's a problem. And even if we could get it from 92% to 80% of agents failing, that would be a huge increase if you really think about it. So that the whole industry has a lot of issues there, but I think that as an agent, your training certainly, I hope you know this, that it doesn't ever end right after you pass your insurance exam. In fact, that's just the very beginning of your insurance career. I mean, I passed mine in 2008 or 9 or something like that, and I mean, I still find out things that and I think you could say the same thing, Kinder, that you still learn things about certain elements of insurance that you were unaware of. So just because,
It's almost an infinite learning curve. It
right,
doesn't go away.
yeah, I mean, there's
It's
just so many different products and things to learn and know about that you could become an expert in Medicare, but that doesn't disability is a whole nother animal, and there's all different you know angles and ways you can look at it. So just because you've passed your insurance exam doesn't really mean anything, because even agents will admit that I don't a lot of agents, just because they have their health license doesn't mean that they know a lot about Medicare. They could have passed the exam and then just done something totally different. But go ahead with your statistic or whatever here.
I got to share this because the Primerica company mentioned earlier, this is an article back in 2011, so 13 years ago. There's a Wall Street Journal article, and I'm not subscribed to the Wall Street Journal. I just don't read it that often. But basically, just reading the first line, Primerica, which is the country's largest life insurance sales force, they had a strong recruiting year. 230,000 people signed up. Now, I'll guarantee you, almost all of them are gone now. But their whole thing was to weaken the licensing test to make it easier for people to get an insurance license. But when we look at the consequences of improper advice, the consequences can be disastrous. Granted, Primerica only sells term life insurance. I have not yet seen the lawsuit of replacing a permanent plan to a term plan and that being considered malpractice. I have not yet seen that. Now, maybe one day that'll show up. Haven't seen it yet. They focus on the middle income market, and all these companies do. They focus primarily on the middle income market. Very few elevate themselves. But in terms of, I made the point there. But in terms of growing, I mean, those letters after my name, I did that because I wanted to be really good at what I did. And I naively thought, once I get those, I'm done, right? Oh, geez, heck no. There is so much more beyond these that, in a way, this is why for certain concepts in insurance financial services, you kind of have to have those. Now, Mike, you don't have those letters after your name yet, but as you can tell, and anybody else listening, he's on this show because he has that exceptional competence. Yes, there's other areas for you to learn. There's too many areas for me to learn. It's one of those things where the smarter you get, but then the smarter you realize that you don't know everything. And a lot of these other organizations, they set their reps on fire, ignorance on fire, saying, and granted, I can see how that works to get action. You don't want to have analysis paralysis. Believe me, I know I can live there. But the idea is, yes, we do want action. You don't want to be stuck studying all the time. But at the same time, they've got to take this seriously because the consequences can be disastrous if it isn't. And who gets hurt the most is the consumer for improper advice. And one of the things, let's use those letters after my name. These companies, generally speaking, do not promote additional education. They don't promote people getting a CFP, a CHFC, CLU, all these different acronyms that are out there for higher education in financial services. And you talk about, a license not the be all and end all. Some people think the CFP is the be all and end all, and it's not either. Now, they're not going to say that they're the entry level designation, but they say they're the gold standard, which is great. But at the same time, most people have CFP. They say you need more education. There's more to it than this. But these organizations, they don't promote them. Why? It interrupts the duplication myth. It hinders the distribution. And also, most of these organizations don't promote belonging to professional associations, such as NAFA, the National Association of Insurance and Financial Advisors. And that's one of the biggest organizations that I believe every insurance agent needs to be a part of, because they advocate to protect clients and the benefits that these policies offer. They advocate from a local, a state, and a federal level. That's my quick commercial on NAFA. And by the way, we all benefit from NAFA and other similar advocacy groups. And so if you're an agent and you're listening, don't be a freeloader. There, I can say that. Uh, you need to be a part of it to support the organizations that help protect us. In addition to that, I'm a member of the IARFC Association. That's the International Association of Registered Financial Consultants. They're the ones that award the RFC designation. And they have a lot of practice management ideas that they share in their publications. I've learned so much from my association with them. And there's so many other organizations, but you will rarely, not everybody, but you will rarely find producers in the network marketing models members of these groups, because it interrupts the duplication myth. They stay focused on their business. And I can understand the focus, but at the same time, clients need better advice. And so, and I wrote this down earlier, most network marketing organizations, they tend to commoditize a one-size-fits-all advice, and they don't necessarily bring the highest possible level of thinking to the client. That's my biggest criticism of it. Okay, that was my rant. So I think I'm good for now. Mike, your thoughts?
Yeah, I mean, I think there's a couple other things that we should probably talk about. I don't know if you want to go into those, but I agree with what you just said. So maybe just bring up the next point if you have one, or I mean, I can always expand into different things too. But whatever you want to do.
Oh, okay. Now that's back on me. It's always back on me, but that's okay. I know that some organizations, and you'll have more experience with this, and we've talked about it before, some organizations, they promote certain products for business reasons as opposed to that being in the best interest of the client. And so that's not all these organizations, but there's some. And it hurts the client because they're being overcharged for it. Although the benefit of those products are that they generally are going to get that product issued far faster than if they went through an actual underwriting process. So, Mike, we can always benefit from your rant on simplified versus fully underwritten here.
Right. Well, we talked about this once before, but there's really three different categories of this. So there's simplified issue, there's accelerated underwriting, and then there's fully underwritten. So we got to keep those three things separate. But the simplified issue is the easiest, of all of them, and it's also the most expensive. So a lot of these 3-letter IMOs, and I'm not going to name them all, but a lot of these 3-letter IMOs, I'm not sure, to be honest, about Primerica, if they're big into it or not, but a lot of these,
I don't think so.
Yeah,
I think
I honestly have no idea.
they might have a simplified they might have a non-medical underwriting under a certain amount of coverage, and that's true with many companies, traditional or network market or whatever. So like I remember like Assurity Life, which is a very good middle income market insurance company. If you were applying for less than 150,000, now once you hit 150,000 or more, they wanted a medical. But if it's under that, then you didn't have to have a medical. And then they have other products with other limits. But yeah, it just depends.
Yeah, so I mean, here's the thing. So the simplified issue is by far the worst, in my opinion. I've made it my personal mission to replace every simplified issue product I can. Granted that I don't just tell them to cancel it first; that we actually get something else in place. But if that's all you have, please do not cancel it until you work with an agent, or you can contact me or somebody. But please don't cancel your life insurance just because you have a simplified issue product. Don't do that. But these things, these simplified issue things, tend to be 2 to 3 times more expensive than either an accelerated underwriting or a fully underwritten product. And the difference with accelerated underwriting, well, simplified issue, there's never an exam. It's either accept or decline, and typically they're table rated. So going back into that, table rated is basically, there's standard all the way up to, Superman, super preferred, plus rate. So standard is the rate when you're applying for insurance that you should expect to get. It's a standard rate for a reason. That's what they expect people of your age and category and whatever, you know, that's the standard person. So you'd be a standard. If you get anything better than standard, that just means that you're in better health than somebody that's the same sex and same age as you are. So, you know, anything better than standard is good. You're getting basically a discount. Now, simplified issue policies, on the other hand, they're table rated, which means that you are sicker than the standard person. So if you're somebody that's in standard health or better and you're applying for a simplified issue or mortgage protection or whatever X product that, you know, has no medical underwriting, for the most part, certainly no medical exam, and you're reasonably healthy, I can pretty much assure you that you're paying 2 to 3 times the amount of money that you should for that product. And, you know, I have a story. When I first got started in the industry, I went to a guy's house. He had a product with an insurance company, and it was a simplified issue product. I got him more than twice the coverage at half the price because I explained the difference to him and he took the medical exam. The guy had a simplified issue policy and he came back preferred.
Oh, wow.
So, I mean, this is almost criminal, in my opinion, to do this to certainly to young, healthy people. If you're an agent and all you're selling is this simplified mortgage protection, simplified issue crap, I'm going to tell you right now that you are doing your client a disservice and you are basically screwing them over. And yeah, a lot of these IMOs actually pay a higher commission rate on these simplified issue products because they just want policies to issue. So not only are you screwing the client, but you're making sure that you get paid. Now, whose best interest is that? Yours or the client's? I mean, I could go on and on about this, but basically, you know, if anybody's watching this and you've had an agent come to your house and they've just pitched you, you know, one product, or they've pitched you something that you don't have to take a medical exam and you don't know what you got, send us a message on here, reach out to one of us. I'll help you. It's my personal mission to fix this problem in the industry. I think it's a plague in the industry. And, you know, so the next thing we can talk about is accelerated underwriting. You know, again, there's no medical exam, assuming that you qualify within the parameters that they have, but they still take a further look into your medical history. And they have, you know, limits on it, you know, based on your age and whatever. So you can get, you know, that's more than most people need. You know, you can get up to $2 million with an accelerated underwriting policy and still get a preferred or a preferred plus or Superman rate. So, you know, depending on the company, you know, you want $2 million or less, you may not have to take the medical exam anyway if you go through the accelerated underwriting process. So, and this is where training comes in, because even agents might not know the difference between accelerated underwriting and simplified issue. I think, you know, there's an obvious difference between fully underwritten versus, you know, simplified issue, where you have to, you know, go pee in a cup, take a blood exam, go get measured, and, you know, all this fun stuff. So, you know, that's a pretty obvious difference. But, you know, there is a kind of a thin, you know, less of a difference between accelerated underwriting and a simplified issue. Certainly the medical questions are going to be a lot more on a accelerated underwriting policy. They're still going to pull the MIB report, probably the driver's report. They're going to pull your credit probably. They're going to probably pull a lot of different, you know, reports to check on everything. And they might call your doctors, or, you know, they're going to require a lot more information than a simplified issue policy will do. But, you know, as long as you're willing to go through a little bit more of a lengthy, you know, application and give the insurance company a little bit of time to do their research, you're going to get a way better price versus, you know, a simplified issue where it's pretty much an instant accept or decline, and, you know, and it's 3 to 4 times, you know, maybe two to four times, whatever the price, you know, that you could have gotten had you just gone accelerated underwriting or fully underwritten. And it's really unfortunate. And I blame the IMOs because they push this stuff on the agent, and they tell you to go out there and put the client in this product, and this is going to be a good product for them, and it's going to issue on the spot, and you're going to get paid, and the client's going to be protected. They make it sound really like a good thing. And if you're a newer agent, which a lot of them are, you're going to be totally unaware of the differences. And a lot of times, even when they are aware, they need to be paid so desperately that they still sell the product because they need money so desperately. And then that's a whole another ball of wax as far as if you should even be in the business if you need money that badly. But I think the important thing here is that these IMOs push this stuff on new agents, and they don't understand the difference. So it may not even be the agent's fault a lot of the time. They may not even know better. I mean, I've talked to agents within an IMO that I was a part of, and they didn't even know accelerated underwriting existed, let alone fully underwritten. All of their agent or broker or whatever told them about was the simplified issue, mortgage protection, this stuff. And they didn't even know that you could do that. So I do blame the IMOs a lot. And I know for a fact, because I've seen it in the commission sheet, that the IMOs pay a higher percentage commission from the insurance company on the simplified issue products than they pay on the fully underwritten or accelerated underwriting products, because they want these policies to issue, and they want and they want to just churn the business. So if you have a policy that's going to take a week or two or even a couple of days to issue because it's fully underwritten or accelerated underwriting, they want the check right then and there. They want to get in and get out, and that's unfortunate because as a consumer, you're really getting screwed, for lack of a better word, on buying these policies.
Hosed.
Yeah,
Yeah.
hosed. I mean, granted, you have insurance, right? So at least you got something out of it. So you have life insurance, and that's, we always promote having life insurance. So that's not the end of the world. But just be careful, when you're out there, and ask them what kind. Maybe just even ask, what kind of a policy is this? Is this simplified issue? Is it accelerated underwriting? Is it fully underwritten? Ask a couple of questions and see if the agent even knows or can explain it to you. And that's the, and that's the sad part. And if they're telling you that it's simplified issue, I would ask them if they offer at least an accelerated underwriting product, that they can offer you. And if they
Like you
say
even
no,
said, they probably wouldn't even know. And I think the biggest clue is that the agent is going to say, look, we issue policies where you don't have to pee in a cup and have your blood drawn. That makes it a whole
right.
lot easier for everybody involved. And they're not even given the option. They just say, here's what we do. And they make it sound so convenient, which is a great pitch. I got to admit, that's a great pitch. And if you're going to make it easy and affordable and everything, there's almost no issue. But the problem is that you can probably get a whole lot more coverage if you're willing to just pee in a cup, get a little blood drawn, stand on a scale, get your, look, you're supposed to see the doctor like twice a year anyway. Come on. I mean,
It's a free. I always tell people it's a free mini physical. The insurance
yeah.
company pays for it. So, you know what, Alonzo? I don't care. Go away. Most consumers don't want to do the health exam. If that's fine, they. What about accelerated underwriting? Didn't we just talk about that? You don't even have to do the health exam. So, let's. And that's the pushback that I hear from a lot of agents, is that the consumer doesn't want to do the health exam. So they don't want to do it.
Sell it.
So that's where you need to push back and sell it. Like, look, this is in your best interest. You want to pay 4 times the cost that you should? Cool. Here you go. Here's the app. I mean, a lot of agents don't even offer it, and that's the real issue. And if you're out there pushing simplified issue policies, you're our friend and all, but come on, man, you got to do
I don't
better.
think that's him.
You know, you gotta you gotta yeah, you know better, man. I hope you're not doing that, but you know,
No,
as
Alonzo
far as
knows his stuff. He's a good guy, but I can appreciate
yeah,
that perspective. Most consumers don't, they're afraid of the needle. You know what? I'm sorry. The older you get, you're already getting needles. And if
yeah,
you're not
I
getting
mean,
needles, that's a red flag in and of itself. But
yeah,
this is still a symptom of a bigger issue of the entire industry, where that's an entire business model that's based on its compensation rather than advice. And I really am based on advice model. I want to give the best advice and put people in the best possible position for their financial service. Yeah, yeah, Alonzo. Yeah, I know you, brother.
yeah.
You've fully
I'm
underwritten almost, so
I,
I get that.
okay, cool. Just plain out, that's fine. But and I know that's the argument, that all of these agents give. Oh, they don't have to do the exam, and they can be declined and whatever. Well, guess what, buddy? If they're issued a policy and they have cancer or something already, and the insurance company doesn't know about it, guess what? They can still rescind the policy within 2 years. So
Yeah. Or if an eligible claim was happening, it's called the incontestability clause,
right,
or the contestability, whatever it is. It's one of those words. But basically, within the first 2 years, if an eligible claim comes up, they could go back and say, well, were you completely truthful in the application? And it could be as simple as the agent, and this has happened too. The agent marks non-smoking, but you've got 6 ashtrays in the living room alone. I mean, come on, there's if there's any misrepresentation on the application, it becomes a problem.
yeah.
And
I mean, if
there's
they're yeah,
Alonzo. He'll be
yeah,
that guy because most agents won't come and speak. Fair enough. Yeah, they're afraid of. I'm okay with that in a way, but we're advocating for the consumer here, as you do too, Alonzo. You do your stuff on
yeah.
TikTok and
No,
YouTube as well. So
Alonso's a good guy. I didn't think he was that way, but when people bring that point up, is they're afraid of the needle, or they don't want to do this, or they don't want to do that. All right, find another agent.
yeah, that's a time where I've got to walk away. I cannot bring that person, depending on how adamant they are. And the fact is, and really, we could these the blood work and everything can actually save someone's life. And the biggest, I know you can take it,
You
Alonzo.
can take it. All right, well, that's good.
But the biggest story is Magic Johnson. Magic Johnson, back in the 90s, he applied for a mass mutual policy, and that's when it was found out that he had HIV. And so, because he applied for life insurance, it was not because he actually saw the doctor. It's because he applied for a life insurance policy with Mass Mutual. And finding that stuff early on can save people's lives. So I don't mind being a part of that story. Hopefully, it's not chronic. I mean, the worst thing I'd want to hear is we just applied for life insurance. I've got stage 4 cancer. Now, hopefully, someone is actually taking a little bit better care of their health before then. But I'd rather be part of the solution for someone's health rather than
Yeah, and
just let it prolong.
I had a similar story. I had a guy that I was trying to help get some insurance in place, whether it was a term or permanent product, whatever. But he told me he was good for the time being, and I, implored him to at least get the term in place, so that way, we can lock in his insurability. And sure enough, within, you know, 3 to 6 months of him telling me that he, wasn't interested right now of moving forward, he had a cancer diagnosis. Um, I mean, and that's not the first time that that's happened either. And this isn't a scare tactic. I'm not trying to, scare anybody into going and buying, insurance, but it does happen. And I've had it, happen recently, a handful of times. So, it is important, if you at least get something, minimal. I think most people could probably afford to pay 15, 20, 30 bucks a month for some kind of a term insurance policy. I mean, $15, I mean, that's, minimum wage a lot of places now. It's an hour's pay, and you could probably get, if you're in your 20s or 30s, you could probably get, on a 10 or 20 year term, just a random guess, you could probably get closer to $250,000 to 500,000, in coverage, as long as you're in reasonable health for that kind of a price. So, I mean, just ballpark guesstimates here, but yeah, I mean, there's no reason not to at least have something. And there's statistics out there about how woefully underinsured the entire country is, even with just term insurance, let alone permanent insurance. Um, and that's a whole
And so
other
that's
part.
why, it's like I'm all for the simplified issue. If you can get coverage, great. Make sure the application is accurate. But at the same time, I wish agents would be willing to ask those health questions. And there's a way to ask the health questions in a better way. So, any agents that are listening, here's what you got to do. What is your height? What is your weight? Is that your real weight? And then,
Right.
tell me, what are the prescriptions you're taking now? We need a current list of prescriptions and the reason behind each prescription. And someone who doesn't have any prescriptions, the older they are, you have to wonder, when was the last time you saw a doctor? Okay. And then, you know, but the thing is, you need to know so you can make sure you're setting proper expectations. But if you as the agent are too afraid of those questions, well, I'm prying too much. You're prying into someone's wealth already. You're prying into someone's family legacy already. Come on, the health questions. Let's get it going. That's don't
Yeah.
shy away.
I mean,
And you also need to then you have to coach the client, because they're going to have either a telephone interview or the paramed, and make sure that they understand that they have to answer the question exactly as it is written and presented. So if you say the question says, in the last 10 years, have you, and then you say 15 years ago I had this thing. No, don't volunteer that. It's like you're the witness on you're on the witness stand. Everything you say can be held against you, more or less. Only answer the question exactly as written, and
yeah,
because we don't want you to volunteer anything that doesn't need to be said.
that's a great point. When I sit down with clients and I go over the insurance application, and they're going to have a paramed, or even if it's accelerated underwriting and the insurance company is going to call them or what have you. I always tell people, answer their questions exactly as they are on the exam. If it asked you if you had whatever 5 years ago, within the last 5 years, and the answer is no, you don't go and say, oh, well, yeah, within the last 5 years I haven't had, but it was pretty close. Maybe 6 or 7 years ago I was diagnosed with this, but not, no, just shut up. When if it's within the last 5 years, then the answer is yes. If it's not, then the answer is no. Don't go expound. Don't go explaining things. It's yes or no. And if you can honestly answer yes or no, then that's all that matters. It doesn't matter what was before or anything like that. The answer is yes or no. And be factual, about your height and weight and your tobacco status and your, extracurricular activities as far as, marijuana and stuff like that go. So,
Yeah.
Be honest about it, because honestly, if you're not, and the insurance company issues the policy and then they find out, they can either just refund your premiums back, or not pay the claim at all, or, so it's a, you want to be honest with the insurance company, because God forbid something does happen to you. You want the people that you set this policy up for to be able to get the money, right? There's no point in paying into a policy for even a couple months and not being able to get the benefit out of it. So just be
We want
honest
the payment of proceeds, not we want the payment of proceeds, not a refund of premiums. And Alonzo's an experienced agent. He actually had a client that found out about cancer. He was just buying a term policy, and it all came back during underwriting. It's just important to find that out. And of course, as an insurance agent, we're paid to place quality risks with the company. But as a public service, in a way, if I can let you know in advance the good news is we figured out you have cancer. Now, you might say, how's that good news? The good news is we found out now, you didn't know before. Go see your doctor now. Get it done. Get it taken care of.
And if your work offers life insurance that you can get at work, you better sign up for it if you're not. So,
yeah, exactly. And Alonzo, co-stream this and make sure your audience has seen this stuff too. We just need the word out on the principles we're talking about here today. But yeah, anytime we can help someone being proactive on their health, like I should talk, but still. But at least I know. It's better to know than not know. It's the devil you know versus the devil you don't, and better to know and be able to take proactive steps
Well,
than to
that's,
not
you know,
know and
and
find
that
out too late.
we can go on a lot of different rabbit trails with this, but that's important too to find out, because generally the sooner that you are diagnosed and find out about these things, the more likely you are to be able to recover from them, and they're able to treat them and stuff like that. So, you know, I understand that it's scary, and you know, I've been through my fair share of medical stuff, and not everybody knows, but you know, so I'm actually uninsurable, and that's why this is important to me, to make sure that, you know, as many people that are eligible can get insurance as they are, because you know, I would give anything I could to be able to buy life insurance, but that's a side issue. But yeah, I mean, you know, the point is that to be afraid of it doesn't, you know, you especially if you haven't gone to the, you know, one of these people that doesn't go to the doctor for, you know, 5 or 10 years. I mean, you know, right. So you don't want to know if you have something or not. But the problem with that is that if you do have something and you do find out about it through one of these paramed exams or whatever, um, now you know, and they're able to help, you know, treat it and have a course of action for you, as opposed to it going on and on for who knows how long and just continuing to get worse. And the longer the things go, the harder they are to treat. So I don't be afraid of the medical underwriting. You know, it's good to have, like I said, it's like a mini physical basically, it's good to have, you know, at least an annual physical anyway. So yeah, don't be
And
afraid
you
of it.
have to do an EKG. That's not a big deal. They put a whole bunch of these patches on you. They measure your heart
Yeah.
rate for a couple of minutes. It's not a big deal. And that's usually needed for when you're getting applying for higher levels of insurance. Don't
Yeah,
be afraid of it.
normally it's not for, you know, like anything under $1 million. They don't generally do that. You know, if you're gonna
I've had
get,
that done a few times. So it's kind of a fun process. You know, like, okay, what does that blip mean? You know, it's a little interesting to try to decipher the chart. But going a little further, I just have my point. I hate it when that happens. But even after the cancer has been in remission, remission, as long as I think 5 years is the magical cutoff time from the time that it's been in remission that you could probably get some kind of coverage. So it's
yeah,
interesting.
it's
The
obviously not
underwriting has become more advanced.
right, and it's not going to be at a preferred rate or anything like that. It still may be table rated. You know, you might have to pay, you know, a little extra premium over standard for it. You know, certainly, you know, you got to look at it from the insurance company's perspective. I mean, that's pretty reasonable, and the fact that they're even offering you coverage at all after having a cancer diagnosis, that's a whole nother conversation. But you know, yeah, I mean, look, and that's the thing. Each insurance company too has different underwriting criteria. So just because one insurance company says no, and I had this happen recently. I had a client, and one insurance company was going to decline them, and the other one issued the policy at standard.
Wow.
So,
Yeah.
I mean, you know, it just that's well, that's a whole other issue on knowing, you know, how different insurance companies work. We could easily probably, you know, make a 3-hour podcast out of this, but you know, we got to eventually cut it off at some point. So, anything else we wanted to go over?
I can't really think about it, but I'm going to throw that back. Um, so, you know, it's better to. This track is called Unknown Enemy. So, better to have the enemy you know than the enemy you don't. And that includes your health. Um, I'm going to start doing tracks every time we do these things just to see what you do. So anyway, guys, thanks for contributing here, especially you, Alonzo. In fact, Alonzo said he had one carrier who declined, and the other carrier, same paramedic exam, got issued preferred plus. Yeah, you sometimes you just never know. You need a good agent that can shop the medical and get you the best possible terms that you need for what you're trying to do. So anyway, guys, we'll see you all next week with whatever we'll talk about then.